Good morning, traders and investors. My name is Roger Scott, and I am the senior strategist for Wealth Press. It's Monday. It's January 30th. I don't know where January has gone, but February's right around the corner. But I'll tell you this, we've got a lot of earnings this week and a lot to talk about. This is going to be one crazy week for the market. Please, please, please watch the entire video, and don't forget to subscribe to our YouTube Wealth Press channel and post comments below this video. I actually respond to each and every one of them, unless they're inappropriate. And sometimes I even respond to those too. Anyway, it's about 7:43 in the morning. The market's going to gear up to open up in a little bit less than 2 hours, in about an hour. And what about an hour? And I can't even do the math, but less than 2 hours, about an hour and 45 minutes or so. The Dow's down about 214 points. The NASDAQ's down 150 points. And folks, we've been seeing a roller coaster. Now, keep your mind, as I go through all of this, the NASDAQ right now is abutting the 200-day moving average. And that is a very, very, very historically strong spot considering how overbought we are. I am expecting the market to shrug off and cool off and pull back. And I think we're going to erase the majority of this upside. But I will get into that further along in this video. Let me show you the earnings that we have on tap this week, and then I'll show you the most significant ones. I spent a few minutes putting this together, and if you want me to email this to you, just send me an email or post a comment in the YouTube Wealth Press channel, and I'll email it to you. But anyhow, Monday, today, we've got a lot of big companies. This is when we get into the heart of the S&P. This week and next week is going to be huge, 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 huge. Expect a lot of volatility. Expect a lot of non-directional trading action. And expect a lot of shenanigans and squirrely trading action from Wall Street. But just to give you an idea, here you could see what's expected, what's baked into the price of the stock. And you could see we have NXP Semiconductor. That's a pretty big semiconductor company. You got Franklin Resources. You've got Whirlpool. A little bit of big mixed bag. Then we've got, let's see here. Tomorrow, I believe we have AMD. This is the big stock for tomorrow. AMD is going to be reporting. They're looking at 67 cents per share, down 27% for the year. And you could see all the other stocks. Tomorrow, we really get into it with Caterpillar, Amgen, Electronic Arts, Exxon, General Motors tomorrow. So it's International Paper. Everywhere I look, Juniper Networks, McDonald's. We're getting into the broad earnings season, the not the tech, but more broader Western Digital. And then Wednesday, you have Meta. Here you could see they're expecting $2.21 per share, 39% lower for a year. We can continue going. You have Allstate, Align, Altria, Aflac. I love saying that. You've got DXC, you've got eBay, you've got Humana, tons and tons of broad market stocks. No real major directional bias. Cuervo, they're a chip maker for Apple. iPad, you got one there. You got Miracle-Gro, T-Mobile. Thursday, you've got the big daddy, Apple. They're looking at negative 7% for year over year, slightly lower revenue. And you could see everything here. Google's on Thursday. I mean, we're talking Thursday is a FAANG day, right? You've got Google, Amazon, Apple. Talk about market capitalization, right? Cardinal Health, Cirrus Logic, Clorox, DEC Outdoor, very, very good company in my opinion. Ferrari, Ford, Gilead Science. Look at these stocks, everything, Merck. And then Friday, we wind down. Friday, Starbucks, Qualcomm. And then Friday, it's not as crazy of a day, but you still have LYB, you still have AON, you still have CBOE. So it's a huge, huge, huge week for earnings. And I can't say they're going to gear up as the week continues. They're pretty hot all the way around. And when you have the NASDAQ 100, literally add the 200-day moving average like this, and the market's overbought and you have earnings, you've got to be really, really careful. Another major loophole you have this week is Fed data. Fed is going to make an announcement of whether they're going to raise or lower rates. I believe it's happening on Wednesday. And then you have the Fed chair conference. We're going to have to watch the TLT, which is the ETF we look to trade the bond market, and it looks like it's curling back down. Now, keep in mind, when this goes up, it relieves pressure on tech stocks and consumer discretionary stocks that rely heavily on interest rates. But when it cools off, when this goes down, which it's doing right now, and I don't know if it'll stay that way. I want to short the hell out of it right at the 200-day moving average. But if it continues moving down, it makes bonds moving lower, interest rates moves higher. It's an inverse relationship. So you have to be very, very, very mindful of that. So you've got earnings, you've got the Fed speaking, then you've got productivity, jobless claims, PMI, employment situation. You've got a lot of Fed data this week. It's going to be a very, very crazy week. I do not recommend you increase your exposure. Matter of fact, I recommend you decrease your exposure because volatility is going to go higher. Speaking of volatility, let's take a look at VIX to see how it's doing. I would be surprised if VIX kept going down based on what I'm seeing right now. We are near long-term support levels, and I think we're going to see higher prices on the VIX over the next couple of weeks. I would be kind of shocked not to see it because I think stocks are going to cool off, and I think volatility is going to come back. And let me show you evidence of that. These are the sectors that I'm watching right now. So just to give you an idea, typically when consumer staples goes up, tech goes down, right? Well, consumer staples has 18% of stocks trading above the 50-day moving average right now. So I want to show you what that looks like and what that looks like historically. This is where we're at right now. Maybe we'll go down a little bit, but look at this. Since 2015, how often do we go down there? And when we do, what happens? We come back up. Now look at consumer discretionary, 82%. Information technology, 86%. Communication services, 92%. While only 56% are trading above the 200-day line. Look at information tech. Folks, that half of the FAANG stocks are information tech. Google, Netflix, a lot of them, like 3 or 4. So look at where we're at. Meanwhile, look at consumer. Look at 56. You see that 92, 56. That's not happiness. That's not sustainability. So you're seeing a lot of vulnerability here, and you're seeing a lot of overbought levels over here. So to me, it looks like we may start seeing a cool off in the communication services sector, which has, just to give you an idea, let me just show you. Instead of talking about it, let me just show you. Look at the constituents in this sector. In the most overbought sector, Meta, Facebook, welcome. Alphabet, checkmark. Netflix, checkmark. I just gave you 3 FAANG stocks. Look at the others. Walt Disney, Verizon, T-Mobile. We're talking about big stocks. If Meta, Alphabet, and Netflix go down, do you think the rest of the market, or at least QQQs, the technology, is going to rally? Of course not. Don't be silly. So let's talk a little bit about what to expect. So further signs of cooling inflation bolstered hopes that the Federal Reserve will reduce its pace of aggressive monetary tightening. That's already priced in. We're expecting there's a 98 or 99% chance that they're going to do 0.25. There's really not much to be said there. S&P is rising to a 6-week high. The Dow is hitting a 1.5-week high. Remember, over the last couple of months, I've been telling you that the Dow is way more overbought, and it's going to go up less or go down more than the rest of the markets. Well, NASDAQ 100 notched a 4.5-month high, while the Dow only edged a 1.5-week high. That's what I was talking about. And the S&P is at a 6-week high, while the Dow is only in a 1.5-week high. So it's moving up a lot slower, because remember, the Dow is trading right now above the 200-day moving average. The QQQ and the S&P are not, or like right there. Commerce Department Core PCE Price Index, which is what they use to gauge inflation, stood at, I don't care about month over month, 4.4% year over year, in line with expectation, saying that we may have a softening demand and easing inflation, which may have a soft landing versus a hard landing. U.S. personal spending fell for a second straight month, but not too much. And University of Michigan survey of consumers showed one-year inflation expectation fell to a 1.34-year low of 3.9% in January. That's not bad. Fourth quarter earnings season, what I've been talking about, really gains up. You've got Amazon, Alphabet, Apple, Meta. They're all reporting this week. Now, here's the bad part. In the beginning of the year, we were expecting the decline to be 1.6%. Now we're looking at 2.9%. Now, Federal Reserve this week on Wednesday is going to make a decision. 98.9% 0.25 base hike is already priced into the market. Europe is doing okay. They're expecting a 50 basis point rate hike. They're going to be announcing it on Thursday, the day after us. China. I'm going to be talking about China reopening and how we can take advantage of China today in my VIP room. I hope you guys make it there. Chinese government boasted sentiment, reiterated its commitment to shore up spending and stimulate local consumption. And they're saying that COVID cases are rising, but they're expecting a full economic recovery. So what am I going to say? I think they realized that lockdowns are just not working. And Japan hit a 1-month high, which is looking good. As I mentioned, you've got a lot of stocks rising and going down pre-opening. You've got Lockheed Martin rallying, Edward Life Science, Kohl's dropped 2%. Dropped 2%. A lot of earnings plays. In terms of momentum levels, as I told you, the market's down today, and I'm expecting, even from the Dow, I want to show you and I want to explain something to you, and I hope you pay attention to me. It's been a very, 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 very difficult market, and I'll explain to you why. Look at this chart. Look at this chart. This is 3 months of trading action in the Dow Jones. Do you guys see what I'm seeing? Let me change the tempo in case you don't like this view. This is the last 3 months of trading action in the Dow. The Dow is the broad market. We've been doing this. We haven't gone anywhere. So we've been really, 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 really choppy. And when you're this choppy, you don't have a lot of directional bias. And when you don't have a lot of directional bias, you don't go anywhere. Sectors don't go anywhere. They stagnate. You need some directional bias. Here you have like 2 days up, 2 days down. I mean, this is option income seller's market. I think we're going to get out of this by breaking below the low. I think we're going to cool off, especially with the QQQ right now, right at the 200-day line, and the RSI just popping up. I mean, look historically, we bounce off the 200-day, and look at the SPY. SPY looks like it wants to go below the 200-day, especially with momentum levels where they're at right now. I think this market is going to cool off. Also, look at the trading action on the SPY. Very consolidated, very choppy. I think we're going to break down and we're going to go a little bit lower, and I think that's going to be the big breakdown. But I'm expecting more downside this week. Last week, if you look at 20-day highs, you had 348 stocks. A few days before that, you had 441 stocks. It can't sustain these levels. So I believe the market will be cooling off. This week, right now, you want to keep your eye on, let me just show you where the money is. Energy, basic materials, financial, and industrial. Be very, very careful with communication services. Be very, very careful with technology. And be very, very careful with consumer discretionary. Now, for the first time this year, I think, I may be a little sarcastic, they're next to each other. But I think they're going to come off together as well. And I think consumer staples, utilities, and healthcare are going to start coming up, becoming more defensive. And these speculative sectors are going to come down once again. I don't think they're ready to go higher permanently just yet. Maybe I'm wrong, and I hope I'm wrong, but I don't think that's the case. I don't think the market is ready to rally, especially with the QQQ being in a downtrend, still being in a downtrend, and just hitting the 200-day moving average and moving up from 260 to 290 in a few weeks. It's just too much, folks. It's too much, and it's unsustainable. Now, folks, we've covered price mismatching in the option market. This is going to shock you. Thanks to this little mismatch, a tiny 1% move in stocks could lead to gains as high as 31, 41, even 46% in a matter of days in options, if you know what to do. Now, once you learn how to use this pricing mismatch to your advantage, you'll never ever look at the stock or the market the same way again. I'm not kidding. You're going to love this. I'm going to blow implied volatility wide open for you guys. I'm holding a very special first time ever presentation tomorrow, Tuesday, Eastern Time, 1 p.m., January 31st, last day of the month, to show you a pricing mismatch in action and share with you how to apply it to option trades. You don't want to miss out. This is all meat and potatoes. I've been preparing and I've been holding I haven't been wanting to spill the beans. I've been holding this down. It's going to be amazing. It's going to uncover some things that you guys are definitely 1000% going to want to apply to your trading. Options mismatched. Use this to leverage options the right way. Tomorrow, Tuesday, January 31st, 1 p.m. Eastern Time, not Pacific, not Central, Eastern Time, 1 p.m. Do not miss out. This is a world exclusive reveal by me. No tricks, no monkey business, no banana in the tailpipes. You got to check it out. It's happening tomorrow. World exclusive reveal. Price mismatch on options. You guys are going to love it. Keep your eye on the market. We're at the 200-day moving average on the QQQ. There's a lot of vulnerability right now. We've got earnings coming out. I'm seeing a picture of us cooling off. Check out. I'm going to give you more info on that tomorrow as well. Remember, 1 p.m. Eastern time, I've really uncovered a pricing mismatch in options that you need to pay attention to. 1 p.m. Eastern time, January 31st, last day of the month. We're going to end January with a bang at 1 p.m. Eastern time on Tuesday. Follow the link below. And if you have any questions, comments, feedback, send me an email or post a comment in the YouTube Wealth Press channel for me under the video. I will respond to you there. I will. And I'll say hello too. Bye. Have a great, great week ahead. It's going to be a crazy week. Wear your protective helmet this week. Bye, guys.